Thank you, Professor Matev. I'm Georgi Iliev, and I will be talking to you about China in the next 1 hour. That's the content for today. I'll say a few words about China's phenomenal growth, about exports and imports, the currency appreciation pressure, the forex reserves, investments and stock market, and I'll wrap up with a few words about China's global role. And please feel free to ask me questions throughout the presentation if something is not clear. Or if you think of something that you'd like to know at that moment, or keep your questions for the end, as you feel like. I would prefer that you ask me when you think of something. A few words about me, why I'm talking about China. I've been dealing with China for the last 13 years, professionally and academically. I did my undergrad degree in Chinese studies in Sofia and in China. I did a master's on China at the London School of Economics. I did an MBA in the States, part of which I spent in Hong Kong. And professionally, I started my career in China with an internship 9 years ago. Then I worked with Chinese business news. I was editing Chinese news for Factiva and Reuters Business Briefing. I was teaching economy of China at Sofia University for 3 years. And what else? I was writing articles for Capital Weekly. And now since the summer I've been working for a venture capital network, which is, my role is business development for China. And I would like to start with the phenomenal GDP growth story of China. But before that, I'll walk you through a little bit of history with some statistics starting from the birth of Christ, GDP per capita, not per capita, per country, which were recreated by famous economic historian Angus Madison, who calculates that in the year one, at the beginning of the first millennium, China and India were the biggest economies in the world. As you can see, China is twice bigger, that's the red bars on the bottom, twice bigger than the Roman Empire, which is the countries on top. And the population of China was twice as big. It was 120 million people versus 60 million in the Roman Empire. So the living standards were pretty similar. Then another point in time, which is interesting, is around year 1000, here, when China was at the verge of making an industrial revolution, 8 centuries before Britain. And one of the hypotheses why this didn't actually happen is that China had such a sophisticated economy, interconnected between trade, agriculture, and artisanry, that a step towards industrialization would have been a step back in the short term, so they would have lost out on productivity in the short term. Something like Bulgaria converting into the market economy after the planned economy. Something similar would have happened. So China remained the most advanced economy in the world in the 11th century, but didn't take it into industrialization. Then 4 centuries later, around 1400, somewhere here, the Chinese admiral Zheng He sailed across the Indian Ocean 7 times. He reached Mecca, he reached Africa with a huge fleet, but he did not colonize anything, even though he could have done it fairly easily, because for the Chinese at that time, those countries did not represent any interest. They weren't as advanced as China, so they didn't see any point in colonizing. And then in the 1800s, when Britain had started its own industrial revolution, China lost 2 wars against Britain, the Opium Wars, and that's the start of the decline of China. So basically for a century and a half, China's role in the world kept shrinking. And then in 1979, after Mao Zedong had died, Deng Xiaoping started economic reforms, and now China is going back towards its long-term role average in the global economy. As you can see, China has accounted for about 30% of global GDP during the last 2 millennia, and now it's coming back to that level. Here is a brief snapshot of the BRIC economies and how China has diverged in terms of GDP growth. Of course, Brazil is still richer than China, but per capita. But China has made phenomenal progress, even compared with India, which only started growing 5-10 years ago. Now, what does the China story, what is it based on? There is an interesting economic phenomenon in East Asia called the flying geese model, which is basically the story of rising value added. An economy, as an economy grows, it goes up the value added ladder, and it drops industries which are lower technology, so they are passed on to other less developed countries. This happened with Japan, which started with textiles and then steel, and gradually all these industries disappeared from the Japanese economy. At one point, Japan was the biggest steel producer in the world. It's not anymore. Now China is 6 times bigger in steel production than Japan. So as Japan grew as it advanced in its technology, it kept passing on older industries to first the Taiwan, South Korea, Hong Kong and Singapore, then came the ASEAN countries, then came China. But now China is on a level equal with the ASEAN countries, with Thailand, Malaysia, in terms of productivity and level of economic development, especially the coastal regions of China, which are the more developed. Now, the second part of the flying geese story is that China is actually devouring the whole model of the flying geese within itself. So basically, the more advanced coastal region is already shedding these old industries and is transferring them back inland. And now, actually, in the last 2 years, the inner provinces of China have been growing faster than the coastal, more export-driven economies in the south and the east. And not only that, China is not only moving up the value chain in terms of production, it is still, the inland regions are still the cost-cutting destinations where you can export your polluting heavy industry and produce at a lower cost than you might do in Latin America or let alone Europe and the States. But also, China is becoming a big consumer of high-tech and luxury goods. And as you can see from the statistics, Chinese tourists are the biggest now per capita buyers of luxury goods and a very prized target market for all those luxury goods firms. Also, the sports cars manufacturers, German companies love China now, and they've been starting production of Mercedes, BMW has been produced there for at least 10 years. And they're also importing sports cars. Because the income disparity in China is so high now, it's comparable to the United States in the gap between rich and poor, which means there are many rich people in China who can afford a lot. And of course there are many poor people in the rural provinces. Now, what does China's phenomenal growth, what is it based on? it's actually China is walking on a very narrow path between two precipices. On the one hand, on the one side is low growth, lower than 7 or 8%, which is very dangerous for China if this happens. I'll tell you why. On the other side is growth higher than 10%, which is dangerous too. So China is trying to move in that very narrow margin, narrow band of 8 to 10% growth. If growth drops below 8%, this can lead to serious social unrest, because on the one hand we have the very high gap between rich and poor, so the poor might rebel if not enough wealth is being generated to trickle down to them. On the other hand, in rural areas, people see their land encroached on by developers for various schemes, and there is a lot of pent-up social unrest in rural areas. 2 years ago, there was some statistics saying 70,000 cases of protests and rebellion had taken place in China over 1 year, which is huge. It doesn't get that much coverage in the Chinese media, but it does get in Western media. And still on the low growth side, there are 200 million urban migrants, rural people who have moved to the cities, who are the floating population of China. And these 200 million people need jobs, otherwise imagine a rebellion of 200 million people. Now, we go on the high growth trajectory. And what's dangerous for China is that if it keeps growing at rates higher than 10%, this could lead to, of course, inflation and the formation of bubbles. And these bubbles have been a problem for China for the last 2 decades. One of the reasons for the 1989 student protests in Tiananmen was actually the high inflation of 1987 and 1988. And of course, the students are just the tip of the iceberg that you see in the protests, but there was a lot of social unrest at that time. And the Chinese authorities know they can't afford to have protests resulting either from low growth or from high growth. So they try to keep the growth steady. And they've managed so far pretty well. Now, one of the cases, for instance, of the formation of a bubble is the high-speed railway network in China. China now has 7,000 kilometers of high-speed railway track, which is more than the whole world has combined, the rest of the world, which includes Japan, France, Germany, which have had high-speed rail for 3 or 4 decades. And that's not sustainable. It was partly financed with the stimulus package that China passed, which was something to the tune of $600 billion US dollars. And part of it, of course, was spent on infrastructure because it's easy to spend and it's easy to lead to results. Last week, the railway, the high-speed line was